All right, yeah. So it's really important to have a strategy for accumulating Bitcoin at a steady pace, right? That takes into account the volatility in the market, and having a strategy that allows you to accumulate Bitcoin in a way that shields you from the volatility. And I think the best way to do that is to steadily buy a certain increment at certain time intervals that are established in advance, right, and written down, and that you just sort of know. It's just a disciplined program that you adhere to, which is the opposite of um, buying a massive position all at once. You know, it's
Yeah,
not
buy, yeah,
yeah,
just buy the dip, bro. Buy the dip.
because some guy on YouTube said it was a good idea or something like that. But if you do that, if you accumulate that, then you're stepping into the profitable strategy that miners enjoy, right? When miners are mining from the Bitcoin network, right? The way miners accumulate Bitcoin kind of shields them from volatility because they're constantly accumulating Bitcoin, right? At steady increments.
Yeah, in a way, yeah, and they're actually collecting the revenue of the mining operation basically every day, every week. So they're getting Bitcoin at a price which is always average.
Yeah, and there's another dynamic that, like, if you back test miners' revenue and you look at the amount of risk adjusted mining strategy compared to dollar cost averaging, the risk adjusted mining strategy is essentially going to generate more profits. So essentially, what that means is that if price drops from like 10,000 to 5,000, hypothetically, uh, the miner is going to be continually, assuming that they have all their machines plugged in, they're going to draw uh, more profit from the market than would be, you know, understood at face value, right? Somehow they generate from that constant supply
Yeah,
schedule. They generate more profit than it is kind of intuitively known.
yeah. I mean, I like to look at it like in this way. If a miner is in the business and you see that it could be an enterprise or whatever, but if they are staying in the business for like 1, 2, 3, 5, 10 years, while the average investor usually is being wiped out in like 1 year, there must be something different in the strategies, because if a miner which is running a mining operation can stay in the market and being profitable, having margin for 10 years, while the so-called improvised investor can be wiped out in a week or in a month. Of course there is a difference in the two strategies, and of course one is yielding more than the other. That goes beyond all the doubt. Absolutely, yeah, I agree with that.
I think that's why you see a lot of the major, like the big boys getting into Bitcoin through the mining network, like BlackRock. And it's like researching BlackRock, it was hard to find a publicly listed Bitcoin position that they had. Um, so that doesn't mean that they don't have one. I just couldn't find it. But I could find they have a massive stake in some of the industrial miners in the Bitcoin
Oh
network.
yeah.
So BlackRock in particular. Um, so that that makes sense, right? Because if you think about it another way, like if you have a scenario in Bitcoin where you do have a supply shock scenario, like I did some of the calculation on, I was looking at a liquid supply. I don't know if you saw the video I did on a liquid supply, but basically it's that 65% of the Bitcoin supply is being held by wallets that are inactive essentially and have no history
Okay,
of
yeah.
really moving or selling or distributing. And then I calculated, how much supply is circulating on the market, and and then say, right, so I don't remember the exact numbers, but it's something like 4,000 coins that are
Yeah.
circulating supply. And then if you exclude the illiquid supply, right, and the coins that haven't been mined, and then you assume that those that percentage of the circulating supply, you just conservatively say 50% are probably going to be buyers and 50% are going to be sellers, assuming there's a supply and demand balance. Again, it's
Yeah.
never going to be that way, but just for the sake of it, I assume that. And then I calculated that the amount of money it would take to buy up all the liquid supply of Bitcoin is roughly $111 billion, which really isn't that much money. I mean,
No,
you know
no,
what I mean?
absolutely. Yeah, I mean, it sounds a lot when you say that, but then if you look at the traditional financial market and you say, well, that it's just nothing. You know?
Yeah. So
Yeah.
that's kind of why I'm a little bit fundamentally bullish on Bitcoin. Not necessarily fundamental. Like, I just realized that there's if somebody came into the market with $200 billion and bid 200 billion, right?
Yeah, what's going to happen to price?
Yeah, it's a scenario where, like, if you were in a short position during that event, you're done. Your career's over.
Yeah, I mean, of
You
course,
know?
before we get too euphoric or over optimistic, let's just try to clarify this point, just for the sake of the example, right? If someone would ever want to step into the market with $200 billion, of course, they would do it gradually, right? It's not like they're gonna market buy every single time. Otherwise, they're gonna nullify their profits because they would have incrementally uh, a, a worse average purchasing price. So just for the sake of it, but institutions usually enter the market gradually, as we all know, right? Of course.
Yeah, but that kind of illustrates the reason why I think um, BlackRock and these other big boys get in specifically through staking the industrial miners is because if you think about a scenario where demand has risen to the point where there's just no supply left on the market, right? Because of Bitcoin's inelastic supply.
Oh yeah,
That's a realistic scenario, right? That could
yeah,
happen. Not that it would last forever, but there could be periods of time where that happens. And then in that scenario, the only way to accumulate Bitcoin is to mine it from the network, right?
yeah. And it's kind of funny because it also reminds me about the story when you had the run on gold in the U.S., right? And there is this narrative where the people which were getting rich wasn't the gold seeker, but the people who were actually selling them the tools to actually go there and seeking gold, right? So
Yeah.
it kind of makes sense why you if you want to step into this type of market in the sector in the industry, you start out by investing in the people who are actually allowing the system to, to go ahead, right?
Yeah. Yeah. I think that's what's happening right now. I think, and again, the reason why is because it, it shields them from the volatility and also allows them to, have to constantly be able to accumulate regardless of what's going on in the market. Like
Yeah,
obviously you could accumulate now when price is going down, but what if you want to accumulate when price is going parabolic? And like in that environment, you can't buy Bitcoin on the market. You can't, like, with $100 billion, right? You can't. If Bitcoin's going parabolic, you want to buy $1 billion worth of it. Sorry, it's sold out. Like, you can't.
yeah,
You know, like, it just there's no offers. And then, well, of
yeah.
course, and of course, offers will come into the market once price goes crazy. It'll draw sellers in, and they'll sell their coins. But that's not the time you want to buy. you
No, 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 absolutely.
know?
Yeah, I mean, again, I've been there, so yeah, no, I already offered my, my liver of flash to the market, providing liquidity to willing sellers. So one time was enough for me. Yeah.
Yeah. So when we're talking about that illiquid supply, just going back to that, it's roughly right now it's 65%, which is a historic high, right? It's the highest it's ever been. Um, those that represents a time period also that occurred during the macro high at 69,000. So those, while it's considered a liquid supply, held through that 69,000, which means that to me, I interpret that as like, well, they weren't willing sellers at that price level. So in order to, you know, but the ultimate point is that at a certain price, right, some of those, uh, uh, wallets that weren't willing to sell it at whatever price it was will all of a sudden be, enticed to sell. And another way to put that is like, if you do get another leg of the bull market, right, price runs up to like 300,000, like those illiquid wallets are going to become liquid,
At a point. I
at a
mean,
certain point. Yeah.
it's like everyone has its own point of failure, but at that point, conversely, everyone has its own point of if you want to call it that, greed. So at a point, I need to sell because the profits I'm making are so high that I need to cash them in. Yeah, I get the logic. Yeah.
Yeah. So, I mean, as far as like the current macro environment, I have no fucking idea, man. I don't, it seems like Bitcoin's being dragged down by like the credit markets and
Yeah.
yeah, and everything that's fucked up there. But, you know,
Um, I had an interesting conversation this week with Roman, and we kind of bounced the idea back and forth. But it was via DM, so never really popped in the server. But uh, I don't want to derail the conversation because I think that we should just finish this video and stick to the topic as far as we are concerned. Also, because I wanted to get back a little bit to what we were discussing in the beginning, which is the way you're entering the market, or everybody, anyone else could enter the market. So, if we still got time, I would like to point out a little thing, right? So you said that you're basically putting in a little bit of a capital every 2 weeks, right? And of course, in the long run, if you believe in Bitcoin long term, you're gonna profit from the upside, and maybe some people which are actually trying to catch bottoms, well, they are gonna get burned because they might think they got the bottom, but they're gonna be another bottom after that, and they're gonna sell their position just to see the market go up afterward. So I guess the point you were trying to make, it's really interesting to me because the way I see it is that you can decide to play two different games, right? You can be a trader, you can be an investor, right? If you are an investor, it totally makes sense to put a specific amount of money um, with a specific time interval, every 2 weeks, every month, whatever it is. But you need to keep the two things separate because what I've seen, and what I've done actually, it's a mistake that I was trying to overlap my investment strategy with my trading strategy. And, I don't need to tell you that it didn't end up well, of course. So that was a good point for me. And I think for people who are trying to invest in this environment, in this industry, or this asset class, the type of entering the market, the type of capital deployment you just described could be a very good logic, especially as you were saying, if you have a paycheck. So if you have another form of income, fixed income, which you're collecting every single month. So I totally agree with that, and I like to end the conversation on the topic because we kind of roam around other topics, but we started out with that, and I wanted to emphasize that that was a good investment strategy for me, and I totally agree with that. Yeah.
Yeah, man. I think it's sometimes it's hard for people to separate investment and trading. Um,
Yeah.
but for me, I you know admittedly I do have a little bit of a bullish bias on Bitcoin, but I only trade the bias when I see a setup in the price chart. And I do short Bitcoin occasionally, but essentially the reason why I'm shorting, it's a different perspective, right? Because even when I'm shorting Bitcoin, the intention is to acquire more Bitcoin. you know, so that's kind
Yeah.
of the
Well,
framework I see things with, which is like a little bit different than people who are denominating in USD. And I don't think there's a right way or a wrong way to do it. I think probably the best way to do it is to you know uh,
well,
have an account that's denominated in USD and then have another one that's denominated in Bitcoin would probably be the ideal scenario, and then do it that way.
well, I don't know because my account is denominated in Bitcoin, right? And when I told you that basically I had the luxury of the luck or yeah, okay, the skill, even the skill, they matter, of course. But when I told you that I basically shorted the last two tops of the last 1 year, 1 year and a half, I was operating on an account which was denominated in Bitcoin. So back then, I wasn't thinking about the US dollar, but I was just thinking kind of the same way, but just reasoning into Bitcoin because I was like, okay, I got an account which is denominated in Bitcoin, so I think Bitcoin is going down right now. But if I can short it and I have an account which is denominated in Bitcoin, the end result would be that I'm going to have more Bitcoin, even though the US dollar value it would be lower. But essentially, what I'm doing when I'm shorting these is just I'm hedging myself. So whatever you want to see that, even if you look at the US dollar side of it, or even if you look at accumulating Bitcoin, I think at the end of the day, the dynamic you're putting in order to decide to short that, it's kind of the same. You still want more money, or at least you still want to protect your capital, right?
Yeah. So there's two things going on there, right? There's two things worth mentioning. So one is that I think when you do adopt a Bitcoin standard and you see things that way, you shield yourself from volatility, right? In a way that if you do the opposite, you're mentally exposed to much more psychological volatility, right? If you're
Yeah, absolutely.
so
Yeah.
that's one thing going on, and then the other thing is that um, if if you're successful in trading, right, you're going to grow profits, and I think what a lot of people should do is make steady withdrawals from their trading account, um, from those
Yeah.
profits, and I think that's really
Yeah.
important, and because then it just makes it real and more tangible. And if you get too far up and you don't withdraw, then you get into a scenario where you open yourself up to the possibility of blowing your account just on a
Oh yeah.
psychological level. So then that raises the question is like, okay, well, if you're withdrawing it, where do you put it? Do you sit it? Does it sit in a bank account in USD? I mean, that doesn't seem like a good idea. I mean, maybe a little bit, but not all of it. So you have to ask yourself those questions, and that's different for everybody. For me, I just
Yeah.
Bitcoin is to me the pristine asset. So I hold most of my money in it, but it's not like you have to. I mean, I think everybody should have a position, but you
Yeah.
definitely don't have to hold all your savings in Bitcoin. That I don't.
No, I totally agree with that. And I don't have any other. I think I already said that, but I don't have any other investments long term apart from Bitcoin. I'm not exposed in the equity market. I'm not exposed in commodities or whatever. The only long term positions I have are in Bitcoin. So yeah, for me, it's just a matter of edging. And I think one good thing you could do if you decide to play the game and if you want to trade Bitcoin, aside of your investment operation, it would be to decide first and foremost what kind of